Thank you, everybody, for taking an interest in our business. I hope you're going to find this interesting. We'll look forward to your questions at the end. Well, let's start at the beginning, I suppose, and that is what's happened in this first half, which ended on the 3rd of April, began in the beginning of October. Well, I suppose the highlight or low light, depending on how you look at it, was Plan B. So just for those with short memories, Plan B was a U-turn by the government when COVID increased in early December. On the 8th of December, they announced Plan B, which was wear masks, face masks indoors generally, work from home if at all possible, and then a lot of very confused messages about Christmas parties, which eventually came down into, well, obviously if we're saying work from home and wear masks, we're not going to advise you to go to your Christmas party. And the result of that for the industry, well documented. I think one of the industry averages were 40% down in sales in December. We were better than that, actually. We were probably around the 30 mark. But the central London restaurants, you saw the bookings falling away dramatically the moment that announcement came up, actually on the 8th, even before they further clarified as they went along. So that Plan B was eventually lifted 27th of January. And just to bear in mind, that was that's the key background point, I suppose, for the first half of the first half of these results. I mean, on the more positive side, we are seeing an increase in tourism in London now. I think last year it was between 7 and 8 million inbound. That means international tourists coming to London. And this year they're forecasting around 21 million. 2019 had 40 plus million, to give you a feel of the sort of the scale. But we're definitely seeing more tourists coming back. In this time period, we've opened a big Coppa site in Putney with extensive outdoor seating overlooking the river next to Putney Bridge. And we've opened our new brand, Gnocchi, which is a pasta specialist restaurant, which really is all about very high quality pasta at very reasonable prices, cocktails on tap, again, very reasonably priced. And that opened in March in Islington, overlooking Islington Green. I'm delighted with the first few weeks of that business. Overall, the hotel performance has been very good, actually, despite all this. Average room rates and occupancy is up significantly. You'll get some more details on the room rate and occupancy figures shortly. And then, of course, we've got a distinct look at the last 11 weeks, which actually focus on the time where the next thing that came along, obviously we all know about it, war in Ukraine and all the ramifications of that. And what's encouraging that, as I'll go on, we'll go on to say that despite all that, in the last 11 weeks, we're comparable up on 2019, which, given the sort of relentless slew of negative news about cost of living, inflation, rising of interest rates, et cetera, is very encouraging. And I think speaks to the wider picture that, I've been involved in a lot of recessions in the past. I haven't caused any of them, I hasten to add. But in 2000 and 2008, in fact, back to the early 90s, but in 2008, we built significant businesses at that time onwards. And there's a sort of embedded culture about eating out in the UK that I've seen over a 30 plus year career, where it's become totally embedded. It's a way of life. It's the way people live. And actually, it's not really discretionary. It's part of the way people's lives, how they define their lives. So it's been exceptionally resilient over the last 30 years. And I think despite the issues we're facing now, which ultimately sort of have a temporary root, which is the war in Ukraine, I think people will still search to go out and enjoy themselves. And I think particularly our demographic is a little bit more resilient than others, and a bit more about that later. Delivering against our strategy with increasing availability of prime sites. I mean, the only silver lining in this sort of series of external events that have, weighed against any customer-facing business for all sorts of different reasons, and let's not even talk about transport strike, is that there are great availability now, finally, of sites coming through. There was a period of constipation in the market where sites weren't really coming through because tenants had a lot of protection, but that protection is now falling away. And if they haven't paid their rent and have no plan to pay their rent, then the landlords can actually take back possession. And we are really seeing now a beginnings of a flood of sites coming to market. I'll give you some details later about some of the sites we've got and the deals we've got on those sites, which I think is very interesting. And I think also, unfortunately, in this situation, also, there's going to be further casualties because people were benefiting from rate and VAT benefits, and they've come back to full price now. And there's a lot of interesting stats out there that people who are trading from month to month and have no cash reserves. So I think that lends itself to the site availability as well. So that's really the background picture. We're pleased that we're getting prime sites now at 50% less than we would have got them. Sites that would not have been available to restaurateurs in the past. Prime retail pitches, for example. And we'll talk about Bath, one of our sites opening this summer. That will give you some examples of that. So that's where we are. And I'm going to give you over to Ollie to take you through some of the more detailed numbers.
Thanks, Andy. So, look, on a positive note, it's nice to finally be speaking to you, having been able to trade for the full period. So being open for the full 26 weeks, first time we've been able to do this since we floated a couple of years ago. And if you remember back, this is versus 7 weeks. That's all we could trade in 2021 and just the 24 in 2020. So that's encouraging. But as Andy said, it was another COVID impacted period for us and for all of hospitality. I think Andy gave you some stats on the impact of Plan B. I think the overall impact on the industry was estimated at 3 billion alone in just December. And obviously, whilst there was a recovery after the lifting of restrictions in January, obviously there was a hangover effect. So a number of months that were impacted by COVID. Having said that, our like-for-likes in the 3 regional Coppa Club sites were up despite that for the first half of the year versus 2019. So encouraging for us. And obviously there was only 3 comparable sites. We're now up to 9 Coppas. And overall, they were sort of in line with our expectations. Really encouraging. The hotels delivered a really strong performance. So obviously you can see there we're up 11% like-for-like on 2019. Actually, the room revenue as a whole was up 76% on 2019, with Streatley, one of our hotels, had limited stock back in 2019. But yeah, some really, really encouraging numbers there. And I guess that we look forward to, at the end of the year, being able to start looking at 1 year like-for-likes, getting back into the habit. Now we are trading, and we were trading this time last year. Come the end of the year, we'll be able to give some 1 year like-for-like performance, which will be a lot easier and more helpful to understand. So what does that all look like from a numbers perspective? So total revenue, 17.8 million, up 439%. As I said, we were only able to trade 7 weeks back in this time last year. Adjusted EBITDA of 1.7 million and loss after tax of 2.6. But I guess that the one thing that, again, I wanted to sort of dig into and stress was the strength of the balance sheet. So we've included sort of a cash bridge here to show where our money's gone. So we started the period with 19.7 million in the bank. And you can see, apart from some working capital and timing shifts, virtually all of the expenditure has gone on CapEx. So spending money on projects and sites that are there to drive future growth, drive future performance. And we finished the period with £14.5 million in the bank and still in a net cash position of 1.9 million. So I think I'm going to hand over to Yishay, who's going to talk you through some of our plans.
Thank you, Ollie. So yeah, just dive into a little bit of detail on sort of what's going on, the stuff that we're faced with, and how we're dealing with it, and how we're utilizing the opportunities that this whole thing presents. So obviously, you all know what's going out there, all the sort of the external pressures that not just the industry but the economy as a whole is facing. So what are we doing to sort of tackle these challenges? So you see there sort of many management competitive benefits and cost management. What does that sort of boil down to? I think at the end of it, this boils down to how do we maximize the sales, maximize our outdoor spaces, and maximize peak periods by using different strategies. So as far as menu management is concerned, we are, we've said that before, in a fortunate position where our concept, especially with Coppa, our menus are not single product menus. We're not a sort of a fried chicken concept or a pizza concept or anything like that in that respect, which means we have quite a variety of items that we can play around with, a variety of dishes, a variety of techniques that we can use. We have a chef that is in effect on board level, if anything by name. So on a board level, making that decision, which means we are very quality conscious to start with, and we can pivot quite quickly, even though we're not small anymore. We can pivot quite quickly and create alternatives and massage our menu without compromising quality, and still deliver the value that our guests want and deliver the margins that we need. And how do we know that this exercise has been successful? It's very easily measurable these days. First of all, obviously the metrics of the how much the sales mix and the margins, but also the guest satisfaction scores. So the guest scores and our NPS scores has consistently grown up. Actually, our menus as it stands at the moment, we have the highest food scores we've ever had as a company, which is extremely encouraging for us. So that's to do with sort of menu management, but not just that, supply chain, cost management. So, our use of tech. So whether it's pay a table or order a table, how we measure our success when we change things with sort of all sorts of tools that gather feedback about us externally from our guests on social media or through all the different channels, how we use our central reservation team to sell, how do we use our sales team to push those private dining rooms, weddings, whatever that is, obviously rooms because we have the hotels room. So we've got a lot of ways that we can sort of just turn up the notch just a little bit to get that a little bit of extra. Tendering, obviously this is with supply chain issues that we have, consolidations and very intelligent tendering on product lines, central production. There's a lot of things that we can do to mitigate those external challenges. Going back to our teams, obviously the issues with staffing and recruitment in the industry is well documented. I'm sure you all are very well aware of it. We were very quick to realize that quite a while ago, about a year and a half ago. We saw that coming when it came. We instantly recognized it. Even when we opened Cobham that while ago, we decided to pay about 70 people furlough out of our own pocket because they were not eligible for the government grant. And we reaped the rewards for that. We put a lot of time, a lot of energy, a lot of resources into our recruitment, retention, training, and development. Things like introduce a friend, things like retention bonuses, flexible working time. We still have a while to go, don't get me wrong, but this translates to a lower vacancy rate than the industry standard. I mean, at the moment, we stand at around sort of just under 10%, which is great for this time of year because this is the time where we need the most people. And actually, it's not impacting our business. We don't need to close anywhere. We don't need to change hours of operation. So all in all, I mean, we need to be with our finger on the pulse, but we're very, we're pleased with the work we've done so far. And as far as taking advantage of external tailwinds, obviously the hybrid working thing is here to stay. And because we're not London-centric in many ways, this benefits our more regional sites. That is the DNA of the business anyway. So even without COVID, we would still be that flexible place that you can use as you want, but that a little bit plays to our strength. As Andy said, tourism returning sort of 50% up on last year, more than 50% up on last year. Still a way to go to 2019 numbers, the 40 million, but even 21 million is a lot better, and we can already see it in the numbers that we're doing in central London, especially Tavolino Tower, or Coppa Tower Bridge, some really impressive numbers. And then, as Andy said as well, there's definitely this, I'm not saying floodgates, but you can definitely see the sites coming in. There was sort of a desert for a while because everything was constipated, and now the sites are coming. So again, this is just to touch on who we are, what we are, to remind you guys. I guess the overriding thing we're looking for is, in effect, 30% ROI. And we don't necessarily need to have a spec for each brand. I think the advantage that we have is for our Italian division, for Tavolino and Noci, which in effect are big sister, smaller sister kind of thing, and Coppa. Between them, we literally can use almost any single site. And it's all about the location, the suitability, the layout, and can we make the 30% ROI? That will dictate how much money we're going to spend on it as far as CapEx. And it just gives us the ability to use a lot of places and to consider sites that other operators or some of our competitors would potentially not be interested in. And you take, for example, you see just the difference on this page alone, with Noci being 3,500 to a big Coppa that could be 12 or 13,000 square, and both ends can give you the return that you want. And again, just to see the sheer variety of what we've done over the last year or so. So we've done Putney in November, and the beautiful riverside location. We took two sites that didn't really work, so bunched them together. Really nice outdoor space with about 150 seats, and it's beautiful clubhouse. We were there yesterday, actually. Even with the strikes and everything, was doing really amazing business. Noci, as Andy said, our pasta specialist, that it's only a few weeks old, but we're really pleased with what it's doing. Some super quality product pastas, great drinks, great service, very reasonable prices. And again, only 3,500 square, and it really does the trick. And on the other hand, we opened up a really beautiful place in Hazelmere, an old pub with 13 rooms on top, turning it into this beautiful clubhouse with massive outdoor spaces, with with places for private dining on the high street. An absolute gem of a place that's quite a lot larger. Obviously, it's 3,500 without the rooms. So do a little bit of everything, and we can make all these things sort of sing and dance, which is brilliant. That is it for me. I'm going to pass it back to Andy for the next one.
Thanks, Yishay. I mean, looking at the sales, it's quite unusual. So this week, obviously, we've got the rail strike, but the first 3 days of this week are up 10% on the last 3 days, the first 3 days of last week, and both had good weather. So it shows how Coppa, the work from home, that's the Coppa stuff, Coppa, the work from home, and the regional split of our businesses, even in a big train strike, we're up. I mean, I have to say I'm a bit surprised, but we are up. I wouldn't say that we'll probably not end up the whole week up, but that's the story of the first 3 days. We talked about this 11-week thing, which I think is really important, because everybody gets nervous at these times when there's endless bad news, but the businesses continue to grow during this period. And I think, perhaps British public are sort of slightly inured to this constant barrage of bad news and continuing with their lives. We've talked about the hotel room stuff before. I mean, that's slightly flattered by Streatley not being fully open in those like-for-likes. I think Yishay's point about not closing, a lot of restaurants, you probably noticed yourselves in London, Mondays and Tuesdays are closed. We've never had to close due to lack of staff. In August, we'll be opening the site I was telling you about in Bath, 4-story Georgian townhouse, absolutely stunning. Ollie says, I can't tell you how cheap the rent is, but it's under half of what the previous tenant was paying. That's excluding rent-free periods and cash contributions as well on top of that. That's the exciting opportunity. And we've got 3 other large Coppa sites under negotiation, 2 in busy Surrey towns and 1 in another capital city in the UK. So we've got some interesting big sites coming up. We've got early stage negotiations for Tavolino and Noci. We're focusing in London. I'm a great believer, if you've got a London business that like Noci or like Tavolino, build it out of London, all the within the Greater London area, and all the operational benefits of being close to your business are great, and you can get around all the businesses very easily and quickly. Back in the day, I built a business with 27 restaurants in London, another one with 14 restaurants in London, Greater London, before I moved out of London. So it's definitely an exciting opportunity. And everybody's seen the high streets. I live in Richmond. Nearly all the retail has disappeared in Richmond, and there are many site opportunities in many wealthy London suburbs, which would be perfect for the Italian, starting off the Italian division expansion. In summary, the danger of repeating ourselves, it's solid trading despite all the stuff that's been thrown at the world and at the UK and at us in particular. rollout strategy is the least of our worries because the sites are available, as Yishay explained, and we've got these options of, our overall strategy. If you look at the map, at the moment it's broadly in the south, and there's plenty of opportunities in the south. But we are looking in big cities, particularly for Coppa, in York and in Birmingham and in Manchester and in Liverpool. But we will focus initially on the south because we're a relatively small business and it makes operational sense. I think the strategic and commercial progress Yishay's touched upon. I think the pay and order at table is an interesting phenomenon. We introduced pay at table in Tavolino. Tavolino's got, I think it's got EY and PW head offices next to it. And 75% of people took up the pay at table. So what's the benefit of that? One, productivity is fantastic. Two, the table gets cleared quicker. Three, the customer's happy because when you order a bill in a restaurant, you've mentally left the restaurant. And this is a great way of finishing positively. We're also doing some order at table in our large outdoor spaces by the river, so we can focusing on maximizing sales on these enormous spaces we've got in Streatley and Sonning. And again, we'll do some order at table stuff there too, where you can really gain extra sales for not really that much work. New website's an important thing that's coming up, that opens up shortly. What's the point of a new website? The point is turning inquiries into reservations and bookings. And you can, the great thing about a lot of this social media stuff, you can track it. So we can monitor, what percentage of central reservation calls, what percentage of hits on the website turn into reservations, what's their route through the reservations. And we've streamlined the whole thing and rebranded the whole thing. And that's going to give us a sales kick when that's in early. When is it coming live, Yishay?
We're doing it in the first week of July.
Okay, so overall, we think we've got the right brands. We know we've got the money in the bank. We've got the management experience. We're just going to sensibly take advantage of the situation and get on with doing what we said we were going to do.